Gotta mute and stop video, otherwise you can see too many of me, that's for sure. All right, moving into our 11:30 speaker. Gosh, it's been a morning. It's just been flying by, and we have all these wonderful people that are participating, and we've been having a lot of fun. So I want to make sure before we get into our next speaker with Ed Ussett, that I make sure to acknowledge our sponsors. So let's hear from Local IQ and Midwest real quick here, and then we'll get you into the breakout room.
Midwest Bank. Why Midwest? Simply put, you are our first priority. We're a family-owned banking operation that's big enough to get large deals done and small enough to truly listen and work with you as you work toward your individual goals. We have firsthand knowledge of the challenges and risks you face. And most importantly, we're building lasting relationships with doers like you every day. We don't just say our customers come first, we live and breathe it. That's our commitment to you. Midwest Bank. Did you know that we have an agribusiness blog? We do. Check that out and other helpful resources at midwestbank.com. Visit midwestbank.com for a location near you.
Busy, distracted, on the go. It can be hard to get through to customers today. How do you know what people are paying attention to? How do you connect? And how do you know it's working? What if you didn't have to worry about building a formula for growing your business? With Local IQ, we've got your back. We know how to reach the right consumers because we're in your communities, telling your stories, and connecting with people you care about every day. Powered by this local intelligence and our technology, we help you reach the right people at the right time in the right places. In a simple way that delivers results for your business. So you can keep your focus where it matters most, your customers and growing your business. Local IQ, simplifying local marketing.
Of August last year, near the low in the market in corn and soybeans, I submitted a column to Corn and Soybean Digest, and I put it in ink. I said, I'm thinking early lows in the market. Now, you might be thinking I'm trying to pat myself on the back, and maybe I am for picking the low in the market. But I have to tell you, I had no idea the duration and size of the rally we would see over the last half a year. In fact, I was quite conscious of not putting a number of how far I thought prices could rally, because I felt I'd be a dummy if I said, prices could be 10% higher, and they didn't go up. Anyway, I made the call, and what's the saying? A blind hog finds a cob of corn once in a while. Maybe that's me. Let's look at the rally in corn and soybean markets over the last 6-7 months. What I've done here is I took a look at March corn futures. These are incredible years since 1980, 6 of them. 6 years where over the 6-month period, early August to early February, we saw a price increase of more than 10%. There were only 6 years. Look at the top 3 in this table. March 11, March 07 contract, March 08, 40 to 60% price rises in that time. These are the best of the best, okay? And where did the March 21 contract come in? It was number 1, beat them all. 63% price rise over that 6-month period. And we remain today at roughly these higher levels. Soybeans, same format. I went back over 42 years, picked out 6 years, the only 6 years, one out of 7 years did we get a 10% price rise in March beans from early August to early February. And some of those years, March of 04, the March 08 contract, the March 11, 40 to 50% rise. And where did 2021 come in? Well, you guessed it, number one again. This has been the strongest price rise over that 6-month period that I can find. I didn't go beyond 1980 or earlier than 1980, but it might be the strongest we've ever had. Well, what do we do with this? What do we do with this? Well, let's look for some tips from a few of my best friends. I'm going to introduce you to Barney Binless, Terry Timer, May Sellers, and Hank Holder, and they speak to marketing ideas, strategies before harvest and after harvest. A little bit on methodology. A couple of years ago, and those of you, any of you have heard me before, I used to use a single point in southwestern Minnesota. A couple of years ago, I started to use Iowa average prices. Don't let that throw you. I mean, the price patterns that dominate Iowa are the same ones that dominate us in Minnesota. The conclusions with Iowa numbers apply to Minnesota equally. But I'm using Iowa average prices over a 31-year period. I'm looking for strong tendencies in these numbers. Nothing's 100%. And I also like to look at large differences when comparing two marketing strategies. Sometimes I think that sheds a little light on some of these ideas. Well, let's start with Barney Binless. Barney serves a very important role in my make-believe world. He's my benchmark. He simply represents the harvest price of corn and soybeans and wheat when we look at it. And his purpose is simply, you know, if I'm going to explore some ideas, some better ways, some marketing strategies or tactics that I think you ought to look at, and I've got 30 years of data, how do I know it's effective? Compared to what? Well, compared to Barney. If I can't beat the harvest price, why bother? He has no marketing plan, no storage, no interest in early pricing. He's simply the harvest price, which is every year for corn, the Friday between October 12 and 18, and in soybeans, the Friday and the week before. I want to make this clear that my characters do things in a rote manner in the same way every year. That way, I'm not cherry picking dates or prices or situations to make Barney look bad or someone else look good. It's already pre-established when that harvest date is. Now I'm going to compare Barney to Terry Timer, a pre-harvest marketer who employs us to keep it simple. Terry knows that the seasonal highs in new crop futures often occur in the spring, not always, but often. You only have to go back last year to 2020 to see a year when they did not happen in the spring. However, she uses decision dates to price 4 20% increments in March, April, May, and June. If prices, the opportunities she looks at are above, that opportunity is above production costs. So even though, for example, in 2020, there were no highs in the spring, Terry wasn't doing anything anyway because prices were below her production costs and she didn't perceive it as a good opportunity. She takes action on the Tuesday between the 4th and 10th of each month. And some of you, you're good with math and you're saying 4 times 20%, that's only 80%. You are correct. She is willing to price her insured bushels. The remaining 20% that is not insured will be priced at Barney's harvest price and part of the numbers you see. Her minimum prices last year and this year are 4 1/4 in December corn and 9.75 in November futures. And I think you are all well aware that we are well above those minimum prices this year. Terry's going to be a busy woman this spring. As a matter of fact, As a matter of fact, people, this is the Tuesday between March 4th and March 10th. Terry Timer will be taking her first actions of the year on tonight's close. That's how Terry works. Okay, what I've done here is I've got 32 years of data, but I'm focusing on Terry's active years. And what I mean by that, I'm only looking at 24 years, and you're like, well, what happened the other 8 years? In those other 8 years, Terry's pricing opportunity was below her production costs. She passed. She didn't do anything. So I want to focus on the 24 years when the price was high enough, at least for Terry to get, if not all 80% done, maybe 20% or 40%. Many of those years, 80%. How did Terry match up with Barney? Well, she's in corn averaging 21 cents a bushel better on every bushel produced in those 24 years. 19 of 24 years, she beat Barney. And look at this bottom line, this year's greater than 10%. I kind of think of this as a home run to strikeout ratio, if you will. Whereas if you can win by more than 10%, you've hit a home run. If the other side beats you by more than 10%, that's a strikeout. Terry's ratio is 14 home runs. 14 of those 19 years, she beat Barney by more than 10%. 30 cents on $3 corn, 40 cents or more on $4 corn. It's a big victory, not just a victory. Barney got his piece of pound of flesh, if you will, in 3 of those 24 years. Soybeans, Terry had 25 years where she was active. In other words, 7 years, the early opportunity was below her production cost. But in those 25 years, she's beating Barney by an average of 41 cents a bushel. Beating Barney in 16 of 25 years. That's right. That's just 2 out of 3 years. Barney gets his moments. Years with more than a 10% margin, 12-4. That's 3-1 in favor of Terry. Is it a perfect record? Absolutely not. But does it speak to getting something done in the spring? I think it does. Now, I want to digress here for a moment and talk about the current situation. We've got a couple of things happening, and many of you know just minutes ago, the March WASDE report came out, and I'll just cut to the chase. There weren't any large surprises there. If anything, the market was a touch disappointed that it wasn't bullish, it wasn't bearish, but didn't get any more bullish. We've got a highly inverted market from old crop futures to new crop, from the old crop July in corn and soybeans, July 21, to the new crop December corn futures or November soybean futures. As of February 1, and by the way, it's still highly inverted, not quite as much as it was a month ago, but as of February 1 in the corn market, you can see that inverse, the July at 537, the D's at 448. Today, the July contract is still right in that area, but the December has come up maybe 20, 25 cents. But that was the second largest inverse in 40 years. Strong inverses and high prices go together. And I just want you to think about this from an economic point of view. What do high prices do? Well, high prices have a tendency to slow demand, right? That's the market at work. What do high prices do to production? Well, good time to talk about that as we think about how many acres will be planted and how will we use a lot of fertilizer or not? And high prices encourage more acres, encourage better management. So slower demand, greater supply. Should we really be surprised to find that today's high prices might be a little lower by harvest? Well, I went back 1980 forward. I picked out 14 years, including this year, where we had a sizable inverse, as I showed you, in the July to new crop December contract in corn as of Feb 1. And then I looked at all of those years, the December contract as of Feb 1, and 8 months later as of October 1. Do you see what I'm seeing here? That of these 13 years, 12 of the 13 years went lower from February 1 to October 1. 12 of the 13. We had one exception, the drought of 2012, and it's quite an exception. Now, is this a guarantee? By the way, if we're going to have a drought in 2021, we'll go higher in the harvest. That's a fact every year. But if we don't have a drought, what does this speak to the opportunity of early sales? You know what? Some of you are saying, forget the inverse, Ed. You're missing the point. The point is the ending stocks projection is supposed to be very, very tight this year. Okay, well, let's take another look at it. I'll pull out 13 years, like this year, when the ending stocks to use are projected to be fairly tight. By the way, this is as of February 1. I'll update this for March 1. I don't think there'll be much change. Again, I've got 13 years, including this year. There's an overlap. I think 8 of these 13 years were in the previous table, but 5 were not. I'm looking at years where USDA was projecting a stocks to use ratio less than 6 weeks, pretty tight at the end of the crop year. And what do you see in these 13 years? Well, 11 of 12, this year is the 13th, 11 of 12 went lower. Food for thought, people. The exception being, once again, 2012 and a drought year. We have a big inverse in soybeans, the largest one as of Feb 1, the largest one in 40 years. I pulled out 14 years, 13 years, and all but 2 went lower from February 1 to October 1, all but 2. And the November contract is much higher today. It's $1 higher today than it was on February 1. Is this a guarantee that prices are going lower into the fall? Absolutely not. And in fact, when I put together this analysis, I didn't have a preconceived notion of what it would tell me. But this is what it's telling me. Now I have to add something to this. This is focused on price changes from February 1 to October 1. And you know what, people? I have looked at it. There's nothing special about February 1. It's not like I looked at all these years and said, that's right, you better get it done in January and February. No, there are years in corn and soybeans in these example years. There were years when it helped to be early, January, February, March. There were just as many, if not in more years, when the high came in March, April, May, June, even first half July. So don't go running out and selling grain necessarily today, but look to get something done, I think, in the first half of this year, the end of June, maybe into the first half of July. If you have a pit in your stomach that says you don't get it, Ed, there's going to be a drought this year. Well, then you better look at options-based strategies that lock in a minimum price, but leave you able to take on the opportunity from higher prices. I run a website, trading website called Commodity Challenge, features real-time cash futures and options quotes. It highlights it's a risk management game, not a speculative game. And I developed a new guided game. Very popular this is with educational institutes, high schools, colleges. I use it in my own commodity marketing class. If you're not aware of it, I implore you to go to the website and explore it a little bit. Okay, May Sellers is a post-harvest marketer, and she tells us to have an exit plan. She has on-farm storage. She puts her crop in the bin at harvest to sell it in late spring, the last week of May, hence her name, May Sellers. Her price will be the cash price at the end of May, less variable storage costs, which include interest on her money and shrink. I'm not going to let May Sellers ignore storage costs. And by the way, she has a storage limitation. She can only store 80% of her crop. So in fact, 20% of her crop is sold at Barney's harvest price, and it's in the results you'll see. Can you see why May Sellers likes to sell in late May or early June? And by the way, if you want to know when the real top is, I had a student look into this late last year, and the absolute average high over that 30-year period is actually around June 13th. Don't get hung up on the last week of May, nor should you get hung up on June 13th. It's just sort of an answer to a trivia question. Get something done May, June. That's what May Sellers is trying to do. May had a hell of a year in the year of COVID-19 last year. This is the Minnesota corn price season all over 30 years. It's the same graph I just showed you. I just changed the scale on the left-hand side. This is May Sellers in 2019-20. It was her worst year in 30 years. Having said that, May Sellers is on the verge of enjoying possibly one of her best years in 30 years right now, with grain put in the bin at harvest. 360 corn in the bin at harvest is worth $5.10 today. $10 soybeans are worth $13 today. May's having a better year this year than a bad year last year. How's May doing? Now remember, 20% of her price is Barney's price. And remember, I'm netting out interest and shrink, variable storage costs. May is beating Barney by 16 cents a bushel on average, on every bushel over 31 years, beating Barney in 19 of 31 years. That's not even 2 out of 3 years. That's right. That's right. You take a risk with unpriced grain in the bin. Keep in mind, there's a few years there where May's price was actually better than Barney's, and yet when I take into account storage costs, she doesn't do quite as well. But how about those years with more than a 10% margin? May's got almost a 3-to-1 advantage there. By the way, one of Barney's 4 great years last year, 2020. When this year is done, it'll be 12-4 because May is going to beat the hell out of Barney this year. 50 cents difference in soybeans, again, net of storage costs, beating Barney 2 out of 3 years, more than a 10% margin in 12 of 5 years. And yes, in soybeans, Barney had his most recent big victory last year, but you can bet that May is going to come out on top this year. Here's the secret with May. She has an exit plan. For those of you with grain in the bin and you are, you've got unpriced grain in the bin, first of all, congratulations. It's been a hell of a move. What's your way out? May Sellers has an exit plan. She'll be done by the end of May. Will that be the high in the market? Probably not, but I'm going to guess it'll be a good price. You need an exit plan too. I know I'm speaking to you in central Minnesota. Mora is not too far from St. Cloud, and it just seems foreign, but I look outside and can you believe that 15 days ago I skied the Mora Vasaloppet? And this is me in early February 2019, 2 years ago. Look at my jersey number. Isn't the devil 666? What the hell does that make me? I'm a little concerned about that. By the way, the medal around my neck is not a victory medal. It's a participation medal. Trust me, I'm just trying to finish the doggone thing. Okay, Hank Holder. Don't hold grain in storage too long. This is something we need to look forward on, to look ahead on. Hank is our perennial bull. He's always convinced that prices are going to surge higher, but he only has enough storage for one crop. So every year, the week before harvest, he empties his bins and sells last year's crop. His price is next year's harvest price less storage costs. Again, variable storage costs. And again, he can only store, like my friend May, 80% of his crop. So 20% of it is sold at Barney's harvest price. This is the detail on it. I'll let you peruse that on your own. Barney's our benchmark, but I like comparing May and Hank because these are two producers doing the exact same thing. The only difference is how they get out of it. May and Hank got unpriced grain in the bin. May Sellers hops off the bus at the end of May. Hank insists on holding corn and soybeans another 18 to 19 weeks. Is there a big difference? Well, May is beating Hank by an average of 40 cents a bushel on every bushel of corn produced in a 31-year period. She's beating Hank 2 out of 3 years. Years than more than a 10% difference. I find this fascinating. May's beating Hank 2 out of 3 years, and all but 2 years, her margin of victory was greater than 10%. Again, $3 on 30 cents on $3 corn, 50 cents on $5 corn. These are not small victories, they're routes. Hank has his moments. He's had 5 years where he has beaten May by more than 10%. Quite possibly last year, I should know that. Last year might be one of them. Nevertheless, even though Hank beats May 1 out of 6 years, look at that average over time, 40 cents a bushel. Soybeans, May's beating Hank by an average of 85 cents a bushel. Beating Hank by more than 10% in 16 years. Hank got his pound of flesh 3 times, once out of every 10 years. You want to be May or Hank? Hank is breaking what I call the 11th commandment of grain marketing. Thou shalt not hold grain in the bin beyond July 1. And Laura and the good people at Farming Today are going to provide me with email addresses and cell phone numbers for all participants today. And on early July, I'll start making random calls to people. And by God, your bins better be, I better hear an echo when you step into the bin. Okay, here are some of the tips we had. Terry enjoys solid success with a simple pre-harvest marketing plan. That's not a complicated approach to marketing. Terry doesn't have any, it's very simple. The opportunities are there this year. I shared some background on past years where we had big inverses or tight carryouts. I'm just looking at the numbers, and it looks like this is a good opportunity to get something priced early. May Sellers has an exit plan based on simple seasonal patterns, and guess what? It works. What's your exit plan? And Hank Holder, he disobeys that 11th commandment of grain marketing. And despite the fact that he goes home with the champion trophy once out of every 5 or 6 years, he's paying a big price over time for doing that. These are my pre-harvest marketing plans for corn. Yes, my farms are imaginary, people, so no one's getting hurt here. And I started a long time ago. This morning, December corn was at $4.79. If you start today, you're beating the heck out of me, but I think it's a great opportunity to think ahead. Soybeans, I'm already knee-deep in this, and the opportunities are still there, and that's good news. Timing, nothing special about today or being early, but I certainly think you have to look at the first half of this year as a time to get something done, and don't look at one big sale. Think about a number of small sales, a good average. If you're dead set concerned about a drought, consider options. Thank you. I appreciate the invite here today. What I'd like to do is see if there are any questions from our group here. I'll stop sharing and let's just see if there are any questions.
I see one in the chat here. Do you see those two, Ed? One is, did I miss this? But have you compared Terry and May?
Well, one is pre-harvest marketer, one is a post-harvest marketer. They're doing, one's marketing before harvest, one's marketing after. I've got another character who puts the two of them together, and it's quite powerful, but don't get me started. I've got 14 or 15 characters, and frankly, my family thinks it's a bit of a problem. And what's the other chat? For some reason, I'm not seeing it. Is there any other questions?
Open it up to the group. Unmute yourself if you'd like to ask Ed. Otherwise, feel free to type it into the chat.
Well, I think we've done it, and I sure do.
No, I just want to thank you again, Ed, for the valuable information and the great examples that you point out about the importance of having a plan and then being able to follow it.
Yeah.
And I think too, there's so much happening in the world. There's so much information coming at us. Sometimes it's really important to evaluate what that is against the plan and to being able to move on it. So very important.
I agree, Bernie, and thanks again for having me, and good luck to everyone in 2021.
Thank you.